Hey Vic, thank you. I see you out there. So this is a new segment we're going to try touch on, and I'm not actually in Davos. I used to be a snowboarding instructor back there way back when, 32, 33 years ago, when it was just starting. But strange, we're going to talk about the WEF and Davos, and we're going to talk about the markets this week, what's happened and what hasn't happened, and why things are so good. A little bit of an outlook to next week. And let's just jump in. And of course, everything I say is edutainment. You guys know the drill. And a big thank you to the moderators in the chat. So the story today is really, we had another Chapter 11 event. Some people call it a mini Black Swan. And you know what? Nobody cares. Nobody cares. It's like, talk about priced in. It was actually almost the opposite of priced in. It was underpriced in, if that even makes any sense. Bitcoin right now shot up. We had $1,000 candle in an hour, which is nice. Haven't seen those in a while. And everything else is going crazy. So let's just go. Also, towards the end, hey, Bill Wemmers, people have expressed, all the people who are still here with me on this channel, through thick and thin, it was a hard 2022, a lot of lessons learned. But all the people that have been with me from the very beginning asked I say more of what I feel. Censorship be damned. So I'll do a little bit of that today, see how it goes. I may offend some people, but hey, why not? Let's talk about the market first. Bitcoin and Ethereum are up 32% and 36% since January 1st. And there's still a lot of people being eaten alive by this. Now, the bears had their field day in 2022 because of all the black swans took the pricing down. Now they're still waiting for the 10,000, still waiting on the sidelines, and that's eating them alive. So we still have that, what did I call it the other day? The most hated rally. And that's where we are. But let's look about a few other things. This is Bitcoin and Ethereum. Bitcoin, they both hit their highest levels since September 2022. And by the way, a lot of stuff has gone down since September 2022. And that is big. So we are coming out of the woods rather rapidly, some people might say. Let's talk about as well why Bitcoin, why we talk about Bitcoin. This was a great little tweet by Saifedean earlier today. And he talks about the fiat propaganda machine as an overdrive and the fact that shameless lying thieves want you to believe you're being robbed for your own good. And this was a BBC article that spoke about why inflation is good and how deflation would be bad. But taking 2 or 5% out of your back pocket, or 20%, which is the case in the UK right now, is fine. So it was just a really bizarre piece. And I'm wondering who the BBC actually works for. Very strange. Anyhow, enough of that. Let's talk about the top names in crypto. As you guys know, I tend to be very focused. I look at very, very few assets, but go a mile deep. And that's the most important thing to do when investing, rather than scatter across 50 or 60 different names. So I tend in crypto to look at Bitcoin and layer ones with one layer two exception. And this is how they've turned out over, I marked 3 columns here on this chart. One is the 24-hour change in price. We saw Solana go on a rampage over the last 24 hours, up 12%. The last 7 days and year to date. This is sorted by the last 7 days, but if you sorted by the 24-hour period, the last 7 days, or the year to date, you get the same result. And number 2 in the box is Near Protocol, up a whopping 75%. I won't mention the 136% for the other one. Polkadot as well. Maybe this is running off the back of that developer report too. Phantom also rebounding nicely. And number 5 on the performance list is Ethereum, up 2.5% today, breaking through 1,580. That was a key to 1633. It's up 15% for the week and 34.68% for the year. Even my slide is out of date now as well. Next up, you have Bitcoin beating Matic, which is interesting. And then Algorand, Avalanche, Tron, Cosmos, and at the end of the list, our favorite. So with that, let's talk about another little change in the roster. Solana, only 3 weeks ago, was number 19 on the CoinMarketCap list. It just broke into number 10 a few minutes ago. So welcome back. Good to see you here. Just replaced Matic. So that was another interesting development. And again, if you look at the valuations of blockchains based on fundamentals, it still is by far the most underpriced gig in town, with Phantom coming second based on things like daily active users and activities. Let's look at stocks for the weeks. Here you see it's been a red week for stocks, but a couple of bright signs, things that were beaten down badly, things like Tesla, Google, Meta, Apple, all coming back with a vengeance. You have some of the financial services companies, the banks, traditional banks getting hit hard. And of course, they're in for a little bit of a concerning time. We'll talk about that too later. By the way, this is going to be a long story, but it's going to be packed with information. And when I say KPM, that means knowledge per minute. And you get the most knowledge per minute here on this channel. Let's talk about a bit of history, because I do believe it's very important to be a student of history when you can, especially when it comes to markets and how things behave. But just to share another tidbit that was fascinating, S&P 500 history reminder. And you can see here, as we've been reporting, following the past 40 midterm elections in the United States, the S&P 500 has increased 16% in the following 12 months. What does that mean? Well, in a short note, if history repeats, or even if it close to rhymes, that means the S&P 500 could hit 4448.75. I know 4 is a bad luck number in some cultures, but that is just shy of 4,500 in the S&P 500 by year end, or touch it during the year. So things are looking very, very bullish. In fact, a lot of sentiment is changing very rapidly. It's like the bears all of a sudden pivot when they say, things look like they're going up. So we'll see. Again, there's still a lot of macroeconomic headwinds, still a lot of unknowns with the Fed. We're still going through a recession. But as I always say, markets bottom way before we find out we're in a recession. Let's look at the major Monday on earnings calls. This is the 23rd of January. We're going to have some big names coming out. Microsoft, we've been talking about them a lot recently with their AI ChatGPT stuff going on. You got Tesla. That'll be exciting. MasterCard, I did talk about kind of credit card delinquencies yesterday. Visa, they could be, hit down the line. We'll see what goes on and what happens, and a couple of other names there as well. A lot of oil companies too. But we'll have very close eyes on Tesla. And the question is, can they pull out an earnings surprise? We'll wait and see. Expectations are low. We'll see what happens. Now, Piper Sandler did come out. And these guys are very, very good. Very, very conservative. And they came out with this report yesterday. And they said, easily, Tesla will easily achieve more than 50% delivery growth in 2023, says Piper Sandler. And I, as you know, I've never been more bullish on Tesla, and I'm a student of every piece of data that comes out about the company over the last 5 years. And their price cut, for the first couple of hours spooked the market, but now they know that every Tesla model is under an ICE equivalent and smashes every single EV on earth. But the big problem with the EV manufacturers is one barely makes money and the rest lose money. And the one that barely makes money is BYD. And we'll talk about that in a second too. But here, when they say they can easily smash 50% delivery growth, it's massive. They talked about the ramp up in Shanghai, Austin, Berlin. They talk about the price cuts. And they did a very cool thing as well. They mentioned that the FSD software, I love it or hate it. I know people say, there's people without FSD in Tesla say it doesn't work. It's hilarious. I have it. I know what it does. I see it get better every day. And it's not perfect. But the AI required to drive is extremely difficult. So I hope people appreciate the difficulty. But it's still coming a long way, very fast. But they talk about FSD being a free call option on the Tesla valuation. Again, that's $15,000 of pure margin every time they sell one. So with that, let's jump to the Chinese market. This is from Dan Ives. And Dan Ives has been all over the place the last couple of weeks regarding Tesla. But they apparently, his firm did a survey of over 500 consumers in China, and if they're ready to buy an EV. And the survey found that 76% of EV Chinese consumers are considering buying a Tesla in 2023. With the nearest domestic competitors being BYD in second place and NIO in third. And again, because of the price cuts, feature, functionality, safety, all that type of stuff, quality, range, efficiency, charging speed, luggage, storage, cargo, whatever you want to call it, nothing comes close to Tesla. So even the Chinese market are not going to be loyal to their local manufacturers as they go forward. Let's talk about another little piece of interesting history as well, looking at who owns stocks in the US. And because we're on the subject of stocks, and I thought this was very sad and scary, because we will be talking about the WEF and the elite in Davos later. But this is US equity allocations. Are they equitably allocated? The answer is sadly not. So if you look at these stats here through together, 53.9% of all stocks are held by the top 1% of Americans, the richest 1% of Americans. And then the top 10% of American households own 90% of stocks. So if you pull out the top 1% from the top 10%, you have the top 1%, the next 9%. I put that in the chart. That means the next 9% own 36.1%, I think, of stocks. And sadly, the bottom 90% only own 10%. And that is data from the US Central Bank. So the point of this is the big topic today is kind of sharing data to prove how much kind of the rich own and how they actually call the shots and influence everything. And I get to all that at the back of this video. In addition, big banks, speaking of the big elite, the big banks, Goldman Sachs, Morgan Stanley reported significant drop in earnings. That's why we saw the nasty week that they had. I do believe the traditional banks will be set up for big disruption because of crypto. That's one of the reasons I love layer ones and crypto, because I believe they are prime to disrupt this industry. Citigroup also profit shrank, and Wells Fargo profit shrank. And we had a scare yesterday where people with Bank of America accounts were being wiped out if they had a Zelle set up as well. So lots of crazy stuff happening on the TradFi side of the house. But all the big four banks say brace for a recession. It's coming, and they're already feeling it in their results. In addition, Reuters spoke about the Fed hike, and now it went from 75% of a 25 basis point hike next. Now they're pricing in a 91% chance of a 25 basis point hike and only a 9% chance of a 50 basis point hike. But when it gets really interesting is when you forecast out beyond that, maybe is one more 25 basis point hike, and then that's it. Then they're dunsies, and then they'll start ratcheting back, I reckon, or something will break, including their deficits are exploding because they're paying so much interest on all their debt. So crazy times. Let's also talk about yield curve inversion, another example of mixed signals in the context of US economic fluidity. This is a different Treasury yield curve. I normally look at the 2-year and the 10-year, but this is the 3-month and the 10-year. And it's now the most inverted since 1981. And we know that 2 and 10 is the most inverted ever. And this, again, analysts are looking at this, and this is screaming recession. But the key thing about this 3-month and 10-year chart, it's twice as bad as where we were at the global financial crisis. Twice as bad. So that's a problem, ladies and gentlemen. But hopefully it's just an anomaly of going from a zero rate environment to a positive rate environment. Everything is different this time, perhaps. Now, inflation continues to slow, which is good. We did talk about this week a little bit, but just a quick reminder, inflation fell to 6.5% from November 7.1% in December. November 7.1, December 6.5, which is a big drop. The CPI was down 0.1%, and that was compared to gains of 0.1% in November, big swing, and 0.4% gain in October has a big drop. And the core consumer price index, pulling out food and energy, fell to 5.7%, down from 6%. So a lot of good things are happening, and the deflation is happening fast right there. Let's talk about regulation for crypto. This is the European news. MiCA is the first ever common licensing regime for crypto wallets and exchanges to operate across the EU to serve 450 million people. And there's a lot of Europeans in the audience right now. And it also has things like reserve requirements for stablecoin users. Now, the law is apparently, per the Europeans, they want this to be the standard setter for crypto law and regulation all over the world. But the reason it's delayed to April is they have to translate it into 24 different languages. And I don't know why they just don't use AI to do that. It should be much quicker. And most lawmakers actually don't read all the law anyway. So at least in the US, Senate and Congress, they don't. Let's look at US home sales. We'll touch on how JP is crushing it literally. The US existing home sales decreased by the largest ever annual decline. Again, enough said on that. US home sales are down 34% year over year compared to December 2021. Also, Canada up north of here in 2022, fourth quarter, the proportion of Canada's office space sitting empty hit 17.1%. Home selling down 13.2% in 2022. Home sales down 39% in 2022. And of course, the culprit is high mortgage rates, just like in the US, 6.5% in Canada, about 6.7% here. It was above 7% here for a little while. Now, let's talk about the UK as well. They're also being hit by some real estate slowdown. Commercial sales hit a 10-year low. If you look at 21 billion in the first quarter, 2022, 17 in the second, 11 in the third. Now it's 7. They've gone from like 66% drop in commercial sales of real estate in the United Kingdom. It is not good, the speed at which it's actually tanking right now. But again, and it says a 10-year low, but they've only been measuring this for 10 years. So it's obviously a historic low as we go forward. Now let's talk about rules. Back to regulation here. This are the new Congress, new crypto regulation direction. There's 3 big laws you have to keep your eye on. One is the Responsible Financial Innovation Act from Lummis and Gillibrand. The second one is Commodity Exchange Act. And the third is stablecoin transparency. The last one's pretty obvious what it is. You got to show your reserves if you have a stablecoin. And I think they want to do some really simple stuff. And that is make sure they have maturities no longer than 12 months and they're in US government securities, which is totally fair. I completely buy into that. The first one is important because it establishes criteria between which tokens would be classified as securities to SEC jurisdiction and which ones would be classified as commodities like Bitcoin. It's already pretty clear that will be one. And then the Competing Digital Commodities Consumer Protection Act. This one's a bit weird because this leaves it up to the SEC to decide what is a security and what is not. And I know a lot of people say to me, oh, what happens if this is declared a security? What does it mean to the price? It's like, we'll talk about that on Sunday in the Q&A. Next, tech layoff. Sadly, there was another big one today. Google laid off 6% of staff, their largest layoff ever in history. But it's not only tech. These are some of the, this is just the tech list, but it's hitting all across the board in financial services, etc. But if you look at just the tech list, just 2,025 companies have laid off 306,000 employees just in tech alone, which is, and the rest of the other industries are beginning to hammer that down. So deepest condolences for anybody who's impacted by that. And it is ugly. And I hope the Fed understands the labor market is structurally different. I'll say it for the 25th time. There aren't people that want to work, or there aren't enough people to take the jobs. It's that simple. And when you look at unemployment numbers, they're all BS anyway. So with that, hopefully the Fed is listening. Hey, JP, if you're out there, let's talk about Google, which is on the subject. Google AI trumps their medical artificial intelligence solution is the best yet out of any AI. And again, I have talked about MedPalm AI. The Palm is their version of ChatGPT. MedPalm is their medical version. And it can handle questions that are on things like medical licensing exams, common health queries on search engines with greater accuracy than any other AI out there, as well as most human doctors. Now, this is dangerous because it will suggest that omniscience can deliver best guesses based on data input. But per our good friend Sanjay, he says this: the real key to medicine is discerning which data inputs are relevant and which is noise. And that can only be brought about through experience on the floor, helping patients. Either way, the point I'm mentioning this is Google is not dead. Their AI is better than ChatGPT, but they're keeping it under wraps for now. But they will unleash the beast at some stage. That's why I still remain more bullish on Google than Microsoft. We'll see if I'm right over the next couple of years. Next, restaurants are hurting. In the last quarter of 2022, full-service restaurants fed 16% fewer people than during the same period in 2019. Obviously, this from Placer AI, but this is taking out all the noise from COVID, all the food delivery, all that type of stuff. And this is not good. Restaurants already live on razor-thin margins, and losing 16% of customers is going to hurt and put a lot of restaurants out of business, sadly. Now, this is the warning section. If anybody wants to drop off here, I'm not going to talk about kind of markets and stuff, but I will talk about Davos, WEF, and who we can trust. So this is a little AI rendition of, Dolly Tells Lies was supposed to be a picture, to represent who you can trust. And it came out like this. So excuse the art, but I think it's fun to do. Now, let's do a quick recap of Davos. Now, this is rough and ready, but I have been tracking what's going on there, and the world should watch, because these are the most powerful politicians, leaders, some of the wealthiest people on earth, heads of big pharma, big banks, you name it. The who's who are there, with a few exceptions. So first of all, they did refer to themselves as Masters of the Universe, as Klaus did in his opening speech. Masters of the Universe. That is crazy. Hands up in the audience. Who wants a master? I'm going to make sure I catch your eyes because I see you. Who wants the WEF to be your master? Let me know in the comment below. Next, a small group of individuals whose decisions impact us all. These are people that head up countries like Canada and other UK, etc. And it is scary. The All In Pod referred to these guys as the global elite grifters. Now back to the subject matter of the sessions. Everybody was talking about global recessions, but then some, obviously they're using some American talk track here. Unless we see unemployment move up, I think it's hard to square that with recession. Okay, ladies and gentlemen, that is not a good analog to determine if we're in recession or not. Now, China opening may impact inflation again. That was a big talk because the Chinese will flood demand, including for things like, yes, you guessed it, Teslas, which you saw in that survey earlier. Recession depends on the industry. That was one wise word. I can't remember who said it, but that's definitely true because real estate is in a recession. See how I'm trying to tie everything together here? Now, there is more optimism than one would have expected, which is good considering there's war not too far from where they were, and everybody's talking about recession. But they also did say trust in institutions is ebbing. Woohoo! Including trust in the WEF. And the Ukraine war is apparently not a war, but it's a special operation or genocide or terrorism. So they're not even referring to it as a war. They try and change narrative. And they also said 99% of crypto is a scam. I think it's more like 98%, but they're close. So we agree there. And also notice this year, or I don't know if it's all years, but Elon Musk, Jeff Bezos, and Mark Zuckerberg apparently have no interest in the global elite club. And there is no talk of C19, at least not as much as there was the year before. But this next part, again, not my words, but things I gathered from this great guy on Twitter. This is Drew Hernandez. He pulled out all the key sound bites from all the events there. And he spoke about UK Prime Minister Tony Blair calls for a digital database to monitor who is vaccinated and who is not for a future pandemic, so they can put you on a watch list. And if you don't want to get the jab, or you have some other thing that may interact with the jab, they can lock you up or whatever, or control what you do. It's kind of scary for Tony Blair to say that. And then the WEF declares countries need to respect global rules and says we have countries that are respecting their national interest, going beyond the rules. Okay, here we are, Master of the Universe. And they talk about the New World Order. This is very, very Orwellian indeed. And then Larry Summers was there. And he said, there will be a COVID scale problem within the next 15 years. Okay. But it's interesting because Larry is a big proponent of jacking rates, making sure inflation is killed, which is fair, but up to a certain point before you kill everything else. You know, applying medicine to kill the patient is never a good idea. Anyhow, Drew also said the WEF declares they must establish that new world order. We heard that a lot. They openly acknowledge they will not be part of successful establishing a NWO new world order right now due to times being hyper-partisan and polarized, but they do have it in their playbook. This was kind of interesting. The LGBTQI panel was about subverting culture, and they're saying they're working very closely with Hollywood on this, which is, I won't even say what I'm going to say there, but you know, the reach of the WEF is very impressive. And finally, WEF unveils the 5-minute city utopia, where they claim it will be 100% solar and wind powered, occupied by millions. So they have this plan for this whole city that will be kind of self-sustaining. But guess what you're going to be eating? Drop a comment below if you can figure that out. Okay, back to Germany, which is not far from Davos, just up the road. Despite Russian gas interruption, they are looking very positive about avoiding that recession. I did cover this earlier, but they solved their gas problem. They're no longer dependent on Russia, which is a good thing. So Government deficit exploding. The US government ran $85 billion worth of red ink in December. $85 billion. And the expenditures increased to 540, receipts totaling 455. And remember, the receipts in 2023 will suck because there's no capital gains because the markets are so poor last year. I forgot to add a slide on the performance of the stock market over the last 2 years, but maybe I'll do that tomorrow. And with that, everybody, it was a lot to cover. Hopefully you weren't too upset with the political stuff, but a good recap of all the stuff that went down during this week, the stuff that you need to know. And again, this New World Order stuff, the things that they say, the quiet part out loud, for me is very, very terrifying. Especially people like words from Tony Blair and all the global leaders, all the stuff that they're doing behind closed doors to plan your future. We need to be aware of this and share knowledge so people can decide if they want to opt in for that New World Order or opt out. It's going to be important for the future, and this impacts everything. Okay, if they're controlling your vax status, they'll also control your ability to do things like be financially free, get access to crypto, all that type of stuff. And this is what is terrifying for me. Anyway, hope you enjoy it. Thank you all. See you on the other side. See you tomorrow.